Great, welcome back. So I'm going to very briefly talk about capital budgeting. And again, with these kinds of things, you really need to meet with an accountant because the laws are changing all the time, but I just want to give you some things to think about. You will have the opportunity to use your money in a variety of ways on a variety of different projects. The trick is deciding which one will give you the best possible return for your business based on your predefined timeline. Now with capital budgeting, you can use it for buying equipment, things like that, but you could also look at it in terms of buying equipment for one kind of project, and then maybe you can use that equipment again for a variety of other projects too, or some kinds of equipment or real estate or any other asset can only be used one time. These are things to think about, and that's why we go into opportunity cost, right? You know, you've got a finite amount of money. Most of the spending is a zero-sum game. If you spend $1,000 on one project or one piece of equipment, you cannot spend that same $1,000 on another piece of equipment for another project. Okay, so you've got to keep that in mind. You can't do it all as an entrepreneur, and those entrepreneurs that try to do it all, again, we talked about making sure that you get profitable growth and don't fall into the growth trap, i.e. you grow so much that you put your business in danger of surviving. That's a real blad. It's also a blad place to be, whatever that means. But most importantly, it's a bad place. It's a bad place to be. Tongue twister. You also have to look at the cost of capital, right? Some projects may be more expensive now, and some projects may be cheaper now. But you have to remember, the value of a dollar depreciates over time, right? So you may be able to spend a lot of money on a certain project that will give you kind of a consistent stream of income, or money on a piece of equipment that will give you a consistent stream of income. But you've got to remember, the $1,000 that you spent now may only be worth $950 next year. Okay? So what's the cost of capital? What's the best way to invest that money that you have? Looking at the depreciation of the asset itself that you buy. Okay? You may buy, like, I don't know, a lathe or a vehicle for your business or something, and you have to consider, okay, some kinds of equipment depreciate more quickly than others, and this needs to go into your calculation. Sadly, vehicles, especially new vehicles, rapidly depreciate. That's usually not, unless you really need it, sometimes that's not the best investment, looking at a new vehicle, for example. And then again, how is engaging in one kind of project over another, or purchasing one kind of equipment versus another, going to impact your long-term profitability? How is it going to impact your profitability over 1, 3, and 5 years? Some entrepreneurs only look at a 3-year timeline, some only look at 5, and some of the ones that are facing extinction may only look at a 1-year timeline. So you need to weigh these things out. These are some things to consider with capital budgeting. Well, great. I hope you enjoyed this video. If you did, make sure you give me a thumbs up. That's also like a like. And ask me some questions down below, and make sure you subscribe. I'll see you in the next video.